Hi, this is Vijay Bhambwani, and today I'm going to speak about whether India needs to do more or might have to do more after the Finance Minister Nirmala Sitharaman announced a historic tax cut on Friday. Reforms, competitiveness, and rejigging of the economy is a continuous process. So there's still more to be done, and believe it or not, within a few hours after the Indian government announced tax cuts, the Chinese cut their interest rates. Maybe not by too much, it was just 5 basis points, but then it must be remembered that the Chinese interest rate was 4.25%. The Chinese are desperately expected to try and keep industry into its homeland. Possibly, the RBI will also have to follow suit and cut interest rates. So, will India need to fight a rate war, an interest rate cut war, a currency war, and also compete on the business front? My gut feeling is yes, we will. Let us not forget the lessons learned from the 1997 Southeast Asian currency crisis. Indonesia, the Indonesian currency rupiah, is very close to the 1998 levels, which is 21-year-old currency peg. Malaysia has its own set of problems, and both these countries are exporters. They are expected to devalue their currency to be able to compete with the other Asian peers. The Chinese are expected also to rejig their currency peg to be able to counter India's business offensive by way of tax cuts. So will India have to follow suit? My guess is yes. At 70.5 odd levels, the USD INR might just be allowed to depreciate a little bit so that our exports become more competitive. So we will have to look at the currency war. Will the RBI make corporate India even more competitive by cutting interest rates? My guess is yes, and it's already there as feelers for the next Monetary Policy Committee meeting to be announced very soon. Will we also have to basically announce more SOPs for industry? My guess is yes. So the process that was started on Friday, 20th September 2019 will continue, and I expect even more stimulus, even more rate announcements on broader macro fronts as compared to what is already announced. So as and when the news flow of these announcements come in, I expect the markets to react accordingly, which possibly could be upwards. So hold on to your horses. There is still news yet to come in the pipeline, and the markets will factor in that news and move accordingly. So if you're holding on to portfolio of equity or other asset classes, do not try to offload anything in a hurry, because the end of September also coincides with the mutual fund NAV computation. Typically speaking, quarter endings are supposed to be bullish periods for the markets. So I would expect some more upside, some more headroom before the markets actually start to level off. So more good things in store. Happy investing, happy trading. Till we meet again next time, this is Vijay Bhambwani signing off for now.